Good morning and happy Friday this morning. It's 8:04 a.m. Chicago time on the 15th of December 2023. This is episode number 2591. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, I don't have the pre-market summary sheet. There have been some technical issues here relating to loading full data on my IRT. It's just taking it at least an hour to do it. So that's an issue. I don't have the breakdown. So I'm going to dive right into what's what for today. The key thing to be aware of today is that it's Triple Witching Friday. It's Triple Witching Friday, which means that although the roll is pretty much done, there's still incentive to use the futures, the index futures, to manage and control risk exposure on options that are exercisable this weekend or after today. And so that's where that stands. Crude has rolled to February. The symbol for crude now is CLG4. The premium is plus 0.33, 33 cents. And what that means is that your software needs to back adjust everything before today. Any contract before today needs to adjust those prices up by 33 cents to avoid a false gap in your continuous charts. This morning, we had a bunch of releases. The HCOB manufacturing PMIs came out of Europe, the key one being Germany. These are the flash numbers, came in line. Other than that, we had Feds Williams on the horn. He was speaking about the outlook and basically relatively hawkish. We saw some movement as a result. We saw the market dropping as a result. Feds Williams says we aren't really talking about rate cuts right now. The question is, have we got monetary policy to sufficiently restrictive levels? Fed will be thinking about this for some time. Again, the market reaction is lower. And Feds Williams has moved this market quite a bit in the past as well. New York, U.S. New York Fed manufacturing negative 14.5 versus expected 2.0, so miss there, nothing really big. And then other than that, there's not all that much. I mean, China came out with a bunch of numbers in the overnight session. I think they're the last key numbers out of China for the year. China's doing a lot to stimulate, and that's where that's where we are. Let's take a look at the market itself and look at what's driving things. Here's the S&P, the S&P minis. Yesterday, as expected, we talked about the idea that we knew with high certainty that the close of Wednesday was likely to be incomplete. Buyers did not complete the auction to the upside. We expected it to continue higher, and so it did. We talked about it consolidating the overnight session into a P. It's coiling, so we're looking for a continuation. We got that into the overnight session. However, when it opened, it really struggled. It managed to take out the overnight high right here, but there was a big struggle for buyers to continue the momentum up. We're closing in on 4,800. We're at New Year highs, new highs for the year. And it just really struggled to the top side. So for me, the ES was not all that interesting to look at. And it managed to break below the full session VWAP. So let's zoom in here a bit. There's the full session VWAP test. There's a retest and entanglement there. Once it broke below, this captured my interest. And I was looking for an IB break for a continuation to test the prior high a day at 47.64. But this was just really terrible. This whole section here, really bad. We knew that it was under the day generated prices, so it was resting or flirting with the open, which showed balance. It was underneath the RTH mid and VWAP, so it had a selling tilt to it, and then it got under the full session VWAP, but not the mid, and it just was very, very difficult to kind of just do anything with it. So I found yesterday, I lost interest after the European close, which is 10:30 my time, somewhere in here. And I found it to be difficult to do anything with. The NASDAQ, on the other hand, was pretty obvious, was more obvious. The NASDAQ provided really decent collision entries, in my opinion. Pretty decent pullback, collision entries, all the way down. It managed to break the IB and hold it a little bit. This didn't work out, but still it kept rechecking the day generated prices every time, and it managed to, get into the prior day's range. The NASDAQ, if you recall, we'll look at the profile in a minute, but the NASDAQ actually had better structure on the rally than the ES did. And after we opened, the NASDAQ actually was showing more weakness relative to the prior session than the ES did. It finally pulls all the way back to the day generated, the key reference prices here, tries to get out of the prior range. It tried multiple times, and then it finally gave in and dropped into the prior range. So here's what the NASDAQ looked like on the profile. So this is the NASDAQ right here. The NASDAQ on Wednesday managed to open, test prior high, and settle. Very methodical here. And then when it pushed higher, it left one set of single prints, which I talked about yesterday. We expect those to get closed pretty quickly. And then it finished near highs. I had talked about yesterday, if you recall, some details about how we've run away from value or the point of control, and generally that doesn't go so far. Where I know it was done on pretty big fundamental news, but in general, a market running away from value in this way. If you recall, in yesterday's video, I went into this analogy about the wall and the bricks and the missing holes in the wall, and that when you put a load on the wall, it cannot bear the weight, as well as a wall that's been bricked and mortared one layer at a time, one row at a time. And this is what I was referring to. So the NASDAQ opens, checks, and then falls back, closes the single prints. Again, more methodical here, but it ends up finishing inside of the prior day's range. It didn't quite show us balance yesterday. Pretty active price discovery. We did put in a lower close or settlement, but and we're opening inside of the range here today. What we are seeing for sure is that there is no rejection of these higher prices, so buyers are still in control. The one-time framing continues. Look at these higher lows. That's how we measure trend. Higher lows. Don't care about the high, but as long as the low is defended, then the trend, we call that one-time framing up on the daily time frame, and that continues and it's holding on. So to me, yesterday was a basing play. Today, very, very likely with triple witching. Really nothing on deck for today worth talking about. If we look at what's on the calendar, we've got in just 1 minute, we got industrial production cap utilization. And then we have the S&P composite PMI flash, manufacturing flash that might give us something, but that's 15 minutes after the open. But after that, the calendar's clear. So to me, don't be surprised if we are stuck inside in the Nasdaq, inside between the 650 and the 800 for the session today, and we just do some of this. There's been a lot of sprinting going on, and the expectation is those who've committed, especially going into the weekend, are likely to hold and just not move or change their position. Same thing in the ES, took it forever, but it finally managed to push through. However, the ES still has poor structure all the way through. Below it, all the way through to the 4710, and we are right in the middle. Do you guys hear that? We need to file a complaint with the building. They're not supposed to be drilling after 7:30, I think, my time. Anyway, so yesterday we pretty much had balance in the S&P. I mean, it's a kind of an active price discovery, but you could see there's balance. And it finished right in the middle of the balance on top of the point of control. Below the volume point of control, we're opening in the middle. So what does that mean? What does that mean for us? What does all of that mean? So today, also a busy profile. This is a guy looking up at the stars. Also a busy profile. However, the market finds itself on top of the full session mid, full session VWAP. We do have the overnight point of control above us. So a bit of a magnet there. We find ourselves right on top of the volume point of control. Right on top of the volume point of control. It's opening in equilibrium today. It's opening in balance. Hang on. We find ourselves opening right in balance. So I would say, given triple witching Friday, given the fact that we have run and we are balancing, this is likely to just build another day of balance before the next move takes place. Okay, we have one more week. Basically, we have one more full week of trading before the holidays kick in. Christmas Day is on the 25th. So as of the 22nd, which is next Friday, the year basically comes to a close. So there's still a little bit of room for this to continue running through the 4,800. But for today, I would just be very cautious about being committed. I'm going to need to see the same thing as I said yesterday. I'm going to need to see imbalance. I'm going to need to see the market actually pushing directionally for me to be involved. So pushing directionally looks a lot like this. And then we gauge the pullback, and then we go with that direction if the overall context supports it. This morning, I'm just going to sit out and wait until that happens. Crude rolled forward to February, so we're on the F4 contract, G4 contract like it shows here. Crude, sideways overnight session, sideways open. The opening crude is an open auction. Crude managed to run up pretty well and then fell back in later in the session. So it's crude is also in this kind of stuck range. If we look at it on the profile, you could see that it's, it built this balance yesterday, and we're opening right in balance as well. Crude has popped up and down through the two dividing areas right here, if you recall, and then the second area down here, and we are right in the middle. So same thing in crude, looking for it to just be sideways and maintain balance for today. Gold is a little bit different. Gold did pop higher on the Fed right in here, and it's really flirting with this 2050 area, and it's continuing to bounce against the 2050. Gold, very hard to read because the RTH is such a short session. It's 7:20 a.m. Chicago time, I think, till 12:30. So a lot of the Fed movement is not shown here because this is RTH only. Gold is holding steady, but what I know about gold is this. We saw an excess above 85. So what this shows me here is that the market found these prices to be unfair. It's very likely to have a hard time coming back up into the 85. In my opinion, it's more likely to maintain prices between the 2000 and 2050 as there isn't anything new to input in the macro from the macro front. Gold moves with macro. I posted this chart in Convergence chat room this morning showing the power of the Fed. Power of the Fed. Big movement. See, the Fed pushes everything. Everything became bullish in the futures on the Fed. There's the euro. There's the yen. Crude even responded. And, of course, the indices responded, right? The indices all pushed higher, right? Natural gas did not. So it's kind of been priced in. What this is showing, this is the bonds. This is the 30-year bond. We can see the bond yields are falling. We saw 10-year yields falling. Remember, when the future goes up in treasuries, the yield actually drops, and we saw the 10-year yield drop below 4% the night before last. So it's kind of everything has been baked in at the moment. So this is what's fundamentally likely to drive a choppy market at least into today. I can only look into the day session. Good luck, and I'll catch you tomorrow. And yeah, I'm going to get on the phone here and complain to the building about these noises. Good luck. Have a great weekend. Mind your risk. Make sure you look at what you did this week and what you can do better next week. Incremental improvement is a key part of trading or anything that involves performance. Don't forget to hit the like button, and don't forget that on Wednesday next week at 7 p.m. Eastern, we will have our annual fireside chat, held by Convergent Trading, and during the session, we're going to have Bob Elliott, Jasper from GexBot to talk about zero DTE and using Gex for futures trading. And then we're going to have Jared Tendler to come in and talk about taking stock of this year and setting goals for next year. That's next Wednesday at 7 p.m. Eastern. I'll catch you on Monday morning. Take care.